Welcome back to Coincheck. I'm Abhishek and you're watching 3.0 TV. Today we are updating Sonic or the token S. So we've got big news that has come. So the Sonic community has just passed a major US expansion plan that aims to bring Sonic to Wall Street. We've got ETFs, we've got a NASDAQ pipe vehicle and a new Sonic USA team in New York. That sounds complex, but I'll explain it in plain English and tell you why it could matter. So we'll quickly look at the market prices. Currently it sits at $0.3. The market cap sits at $988 million, just under $1 billion, and the circulating supply is 3.22 billion Sonic tokens. The total value locked on the Sonic chain sits at $373 million. So Sonic sits near the $1 billion valuation band, but today the story is less about the technicals and more about the new US playbook. Check our previous Coincheck episode for deeper tech breakdown into Sonic. So what exactly happened? What is this about? So Sonic Labs gave a proposal and the community has approved it. It's a package to help Sonic scale into US markets. The vote passed with an overwhelming support, 860.6 million for yes, 99.99% voted yes, against 51.2% which voted no. The proposal does three big things. Number one, it creates an institutional demand. We've got set aside tokens and capital to seed a $50 million ETF allocation, an ETF that would track Sonic, and to build a $100 million NASDAQ pipe. NASDAQ pipe is a regulated vehicle designed to bring institutional capital and long-term buyers into the market. It also bootstraps Sonic USA. So it will be launching Sonic USA LLC with the New York team, hire a CEO and BD leads, and put boots on the ground to drive partnerships, custody talks, and regulatory engagement. It's also updated its fee burn mechanism, so it has changed the gas fee distribution, so more fees are routed to builders or burn, increasing long-term deflationary pressure as on-chain activity grows. So what's the bottom line? Sonic is trying to convert product-led momentum into durable institutional demand, not just retail hype. Why is this good news? These are not just promises. The ecosystem is already stacking receipts. So number one, we've seen Python Chainlink integration. So official US macro data, numbers like GDP, PCE, DL final sales is now published on-chain to Sonic. That's critical. ETFs and structured products need canonical macro feeds and Sonic now has them. Number two, we've seen curve ranking and yields. Curve data highlights Sonic as a top chain for stablecoin yields. Some pools delivering market leading returns. So real yields is real capital chasing total value locked. So it's like where the yields are there, people would obviously park their money there. So innovator fund in action, the 200 million innovator fund is actively bootstrapping builders. Decent allocation, we've seen 120,000 Sonic to Fly Trade, plus previous allocations to Silo, ODX, etc. So that's liquidity plus product growth. Then we've seen institutional signals, community polling and governance show appetite for TradFi bridges. The 100 million NASDAQ pipe idea implies real-world buy-side plans. Reports show meaningful capital intent, hundreds of millions express interest. And Sonic has also been doing events and roadshows. So Sonic is sponsoring KBW and hosting Sonic Singapore Summit 2020. So it would be important time to market movements for institutional conversations. We've also seen a DeFi product momentum. So there's the Flying Tulip, which is going to launch, and we've also seen FEM powered protocols and other apps continue to grow TVL and fees. Product usage is not hypothetical. We saw Beats, and Flying Tulip is one of the things traders and investors are more excited about for Sonic, because that would be getting a lot of volume and activity onto the Sonic chain. What are the fee changes with the new proposal? They change how transaction fees get distributed to reduce net inflation and reward builders. So in case of FEM transactions, 90% to builders, 5% to validators, and 5% of Sonic is burned. And that would built in buy-in pressure. And non-FEM transactions are all the more better. We've seen 50% of the transactions will get burned, fees, and 50% would be going to validators. So more burn on ordinary activity. What's the intent behind this? So activity on Sonic now contributes materially to deflation and aligns long-term holders and builders. With new Sonic tokens coming into the ecosystem, the new program will also burn the new Sonic tokens that keep coming in. So what's the final take? Sonic just moved from a fast L1 with cool primitives to an L1 trying to walk into Wall Street. That's a major strategic pivot, and it's backed by real infrastructure wins. Canonical macro oracles, strong yield narratives, and an active innovative fund and a clear governance support. If Sonic actually delivers custody partners, ETF sponsors, NASDAQ pipe execution, and controlled token deployment, S could capture durable institutional buyers and justify materially higher valuation. If execution falters or too much liquid supply hits the market, the newly issued tokens could pressure price. Execution matters more than rhetoric. Watch for partner names, BitGo, ETF sponsors, NASDAQ pipe filings, on-chain vesting, block schedules, and early institutional buying. That's the update. So like, share, and subscribe to T.TV if you find this helpful. I'm Abhishek, and I'll see you guys in the next Coincheck. Thank you for watching.